The US-China trade war, a seismic shift in global trade. Headlines scream of tariffs and retaliation. Markets tremble with uncertainty. Is this the beginning of a decoupling? One thing is certain, opportunity emerges from volatility. Are you ready to profit? This is not just about two superpowers flexing their economic muscles. This is about your portfolio, your investments, your future. We're diving deep into the heart of the trade war. We'll uncover the profit opportunities hidden within the chaos. Buckle up! Understanding the past is key to navigating the future. Let's rewind. History is not just a series of dates and events, it is a complex web of causes and effects, actions and reactions. By examining the past, we can gain insights into the present and make informed decisions for the future. This is especially true when it comes to global trade and economic policies. The trade war between the United States and China is a prime example of how historical context can help us understand current events. 2018. Trump fires the first shot. The announcement of tariffs on Chinese goods marked the beginning of a new era in international trade relations. This move was not just about economics, it was a statement of intent, a declaration that the United States was willing to take drastic measures to protect its interests. The implications were immediate and far-reaching, affecting not just the two countries involved, but the entire global economy. Tariffs on billions worth of Chinese goods. These tariffs were designed to put pressure on China to change its trade practices, which the United States viewed as unfair. The goal was to reduce the trade deficit and protect American jobs, but the reality was much more complicated. The tariffs led to increased costs for American businesses and consumers, and the ripple effects were felt around the world. China retaliates. The trade war begins. In response to the US tariffs, China imposed its own tariffs on American goods. This tit-for-tat escalation created an atmosphere of uncertainty and tension, with both sides digging in their heels. The trade war was not just a battle over tariffs, it was a struggle for economic dominance and geopolitical influence. 2019. Tensions escalate. As the trade war dragged on, the stakes grew higher. Both countries imposed additional tariffs, and the economic impact became more pronounced. Businesses on both sides of the Pacific were caught in the crossfire, facing higher costs and increased uncertainty. The global supply chain was disrupted and markets around the world reacted with volatility. New tariffs imposed, markets shudder, uncertainty reigns. The imposition of new tariffs in 2019 sent shockwaves through the global economy. Stock markets tumbled, and businesses scrambled to adapt to the new reality. The uncertainty created by the trade war made it difficult for companies to plan for the future, and the economic fallout was felt by consumers and workers around the world. 2020, a fragile truce. In early 2020, the United States and China reached a tentative agreement to pause the escalation of tariffs. This so-called Phase 1 deal was a step towards de-escalation, but it was far from a comprehensive solution. The underlying issues that had sparked the trade war remained unresolved, and the truce was fragile at best. The Phase 1 deal, but tariffs remained. The Phase 1 deal included commitments from China to purchase more American goods and to make changes to its trade practices. In return, the United States agreed to reduce some of the tariffs it had imposed. However, many of the tariffs remained in place, and the fundamental issues that had led to the trade war were not fully addressed. The pandemic hits, adding fuel to the fire. The outbreak of the COVID-19 pandemic in early 2020 added a new layer of complexity to the trade war. The global economy was already reeling from the impact of the tariffs, and the pandemic exacerbated the situation. Supply chains were further disrupted, and the economic fallout was severe. The pandemic highlighted the interconnectedness of the global economy and underscored the importance of international cooperation. 2021 to 2024, the conflict simmers. In the years following the initial outbreak of the pandemic, the trade war between the United States and China continued to simmer. While there were periods of relative calm, the underlying tensions remained. Both countries continued to jockey for economic and geopolitical advantage, and the global trade landscape continued to evolve. Supply chains shift. Companies adapt. In response to the ongoing trade war and the disruptions caused by the pandemic, companies around the world began to rethink their supply chains. Many businesses sought to reduce their dependence on China by diversifying their sources of supply. This shift had significant implications for the global economy, as companies adapted to the new reality of a more fragmented and uncertain trade environment. The global trade landscape is redrawn. The trade war and the pandemic have fundamentally altered the global trade landscape. New trade routes have emerged, and the balance of economic power has shifted. The interconnectedness of the global economy means that changes in one part of the world can have far-reaching effects, and the events of the past few years have underscored the importance of adaptability and resilience in the face of uncertainty. This is a trade war unlike any other. the trade war between the United States and China is not just about tariffs and trade balances, it is a struggle for economic and geopolitical dominance. The stakes are higher than ever, and the impact is being felt around the world. This is a trade war unlike any other in history, and its outcome will shape the future of the global economy. The stakes are higher, the global economy is interconnected, the impact is far-reaching. As we navigate the complexities of the modern world, it is clear that the decisions made by policymakers and business leaders will have profound implications for the future. The trade war between the United States and China is a stark reminder of the interconnectedness of the global economy and the importance of thoughtful, informed decision-making. By understanding the past, we can better navigate the challenges of the present and build a more prosperous future for all. Remember when the first tariffs hit, the Dow Jones plunged, the S&P 500 tumbled, fear gripped the markets. Then came the retaliatory tariffs, more volatility, more uncertainty. But here's the thing about the market, it's emotional. Fear drives sell-offs, greed fuels rallies. Understanding this emotional roller coaster is crucial. It's not just about fundamentals, it's about psychology. Let's talk behavioral economics. Ever heard of herd mentality? It's when investors follow the crowd, often irrationally. Fear spreads like wildfire. Panic selling ensues. This creates opportunities for savvy traders. Then there's loss aversion. People feel the pain of a loss twice as strongly as the pleasure of a gain. This leads to overreactions. Traders dump stocks at the first sign of trouble. Understanding these biases is key to staying ahead of the curve. Section 5. Future scenarios. Navigating uncertainty. Predicting the future is impossible, but we can prepare for different scenarios. Scenario 1. Escalation. Trade war intensifies. Tariffs rise further. Global recession looms. Scenario 2. Negotiations. A trade deal is reached. Tensions ease. Markets rally. Scenario 3. Supply chain shifts. Companies diversify. New manufacturing hubs emerge. Global trade reshapes. Each scenario presents unique opportunities. The key is to identify them and act decisively. Section 6. Profiting from volatility, actionable trading strategies. Volatility is a trader's best friend. It creates price swings. Price swings create opportunities. Here are some strategies to capitalize on market volatility and turn it into profit. 1. Options trading. This strategy allows you to profit from price movements, whether they go up or down. Options give you the right, but not the obligation, to buy or sell an asset at a predetermined price. The leverage involved can amplify your gains significantly, but it can also magnify your losses. It's a high-risk, high-reward strategy that requires a solid understanding of market dynamics and a keen eye on market trends. 2. Futures trading. This involves betting on the future price of commodities like oil, gold, or agricultural products. Futures contracts obligate you to buy or sell an asset at a future date for a price agreed upon today. This strategy is heavily influenced by factors such as tariffs, geopolitical events, and supply-demand dynamics. It requires a deep understanding of the market and the ability to predict future price movements accurately. Futures trading is not for the faint of heart. The market can be extremely volatile, and the stakes are high. It's essential to have a well-thought-out plan and the discipline to stick to it. 3. Currency trading. Also known as forex trading, this strategy involves trading currency pairs like the US dollar against the euro. Currency values are influenced by a myriad of factors, including trade tensions, interest rates, and economic indicators. The forex market is one of the most volatile markets, offering numerous opportunities for profit but also significant risks. Volatility in forex markets can be extreme. It requires careful analysis, a good understanding of global economics, and the ability to react quickly to market changes. Successful currency trading often involves using technical analysis tools and keeping a close eye on economic news and indicators. These are just a few examples of how you can profit from market volatility. Each strategy has its own set of risks and reward, and it's crucial to understand them fully before diving in. The key is to find a strategy that suits your risk tolerance and financial goals. Whether you're a seasoned trader or a beginner, always do your research, stay informed, and never invest more than you can afford to lose. With the right approach, market volatility can be a powerful tool in your trading arsenal. Section 7. Tools of the trade, mastering the trading arsenal. Trading is a battlefield. You need the right weapons. Just like a soldier wouldn't go into battle without a well-stocked arsenal, a trader shouldn't enter the market without the right tools and strategies. The financial markets are complex and ever-changing, and to navigate them successfully, you need to be well-prepared and well-equipped. Charts, technical indicators, news feeds, these are your tools. They provide you with the information you need to make informed decisions. Charts help you visualize market trends and patterns. Technical indicators give you insights into market momentum and potential reversals. And news feeds keep you updated on events that could impact the markets. Risk management is paramount. Set stop-loss orders. These orders help you limit your losses by automatically selling a security when it reaches a certain price. This way, you can protect your capital and avoid devastating losses. It's important to have a clear risk management strategy in place before you start trading. Don't risk more than you can afford to lose. Remember, every trade has a winner and a loser. It's crucial to only use money that you can afford to lose, as trading can be unpredictable and losses are inevitable. By managing your risk and being cautious with your investments, you can increase your chances of long-term success. Make sure you're on the winning side more often. Pro tip: start small. Begin with small trades to test your strategies and build your confidence. As you gain experience and become more comfortable with the markets, you can gradually increase the size of your trades. Keeping a trading journal can also help you track your progress and learn from your mistakes. Paper trade before using real money. Paper trading allows you to practice your trading strategies without risking real money. It's a great way to gain experience and test your skills in a simulated environment. By paper trading, you can identify any weaknesses in your strategies and make adjustments before you start trading with real money. Learn the ropes before you jump into the ring. Educate yourself about the markets, trading strategies, and risk management techniques. Read books, take courses, and seek advice from experienced traders. The more knowledge you have, the better prepared you'll be to navigate the complexities of the financial markets and achieve success in your trading endeavors. Section 8. Your call to action. Seize the opportunity. The trade war is reshaping the world. Are you going to be a bystander or a beneficiary? We've created the ultimate trading playbook to guide you. Inside, you'll discover in-depth analysis of trade war impacts, advanced trading strategies, risk management techniques, and expert insights and predictions. Download your free copy now. Don't miss out on this limited time offer. Section 9. Conclusion: ride the waves of change. The US-China trade war is a defining moment. It's a time of uncertainty, yes, but also a time of immense opportunity. By understanding the forces at play, mastering trading strategies, and managing risk, you can profit from the volatility. What do you think? Will the trade war escalate, or will a resolution be found? Share your thoughts in the comments below. Section 10, coming soon, building a crisis-proof portfolio. Stay tuned for our next installment, where we'll explore how to build a portfolio that can weather any storm. We'll delve into diversification, asset allocation, and long-term investment strategies. Don't miss it.